أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله الصلاة والسلام على رسول الله السلام عليكم ورحمة الله وبركاته. How are you all? Alhamdulillah, very good. So everything is working today. I sent you the link of the previous lecture from the other section. Were you able to access the video? Were you able to access the video? Okay, very good, very good. So let's start our discussion, continuing our discussion on chapter 9. We are going to formally now start talking about the steps in the monetary unit sampling. So as you can see, the steps in the monetary unit sampling are the same as the attribute sampling steps. All right. You remember these 4 steps in the attribute sampling that we discussed in chapter 8: plan, perform, evaluate, and document. So what we have in the first step, planning, are 3 activities. A, determine the test objectives. B, define the population characteristics. And 3, determining the sample size. Now we are doing this to perform an audit procedure. The audit procedures for testing an account or a balance is known as what? Can anybody remind us? Substantive tests, right? Substantive tests. Very good. What else do we call the substantive tests? Test of details. Very good. Very good. So we have substantive tests, which are the same as test of details. Substantive test is the actual audit. Everything that we do, as I mentioned in our previous class, everything that we do until the substantive testing or the testing of details is to figure out, is to determine how much substantive testing we're going to do. And everything else we do after the substantive testing is based on what we found in our substantive testing. So substantive testing is the heart of the audit. It is the heart of the audit. It is the actual audit. Okay? Now, to do that, we can use different sampling techniques, and here we are using the monetary unit sampling. So before we do the actual test, we have to plan. Part of the planning are these 3 activities as you see: determining the test objectives, defining the population characteristics, and determining the sample size. So let's talk about the first activity in the planning: determining the test objectives. Here we could test the reasonableness of an account, accuracy and existence of inventory, for example. So our test objective, right, is to see whether the amount presented in the balance sheet by inventory, is that reasonable? Is that fair? Is that something that we can accept? That's our objective. That's what we want to test. So that's one thing we could do. There is another thing that can be done using monetary unit sampling, is to develop an estimate of some amount, for example, sales return for a new product. So monetary unit sampling can be used to make an estimate of a particular amount. An example that is given here is the sales return of a new product. So you have sales returns. You sell to customers and they bring the product back. They don't like the product. How often will it happen for a new product can be calculated based on monetary unit sampling method as well. But this is just for information purposes. This is not used frequently for audit procedures. This is something that you should know, okay? And put it in the back of your head. Our main goal when we are using monetary unit sampling to perform an audit procedure, to do the substantive testing, is to see whether a particular amount is reasonably presented, is fairly presented or not. Okay, so that's our test objective. That is the objective of the substantive test that we're going to perform. So far, so good. You're following? Is it clear? All right. B is to define the population characteristics, right? So we want to know the population characteristics, and we have three things under this. Population, what is the actual population? How do we define a sampling unit? And what we are going to call a misstatement. So remember, in our attribute sampling, our population was the entire set of checks that had 10,000 or more. I'm going back to what we discussed before. $10,000 or larger checks. That was our entire population. In our previous example, the sampling unit was a, who can remind us? In our previous example, our sampling unit was, who remembers from the attribute sampling? Right? And in the previous example, in the attribute sampling, we said deviation because we were testing the control. There is no misstatement when you're testing the control. There is deviation, meaning they did not follow the control procedure. But here we are looking for the accuracy and existence of a particular item, for example, inventory. So here we would have to define what misstatement means. All right? Are you following so far? I'm not getting any responses. I'm not sure if you're hearing or you're following. Okay. All right. So let's talk about population. The monetary value of an account balance, such as accounts receivable. So when you're testing a particular balance, right? For example, accounts receivable or inventory or accounts payable or something like that, all the items, all the items recorded, all the numbers recorded in the accounts receivable is going to be your population. Does that make sense to you? Does that make sense what I just said? So let me show you uh, from the actual financial statement. So if you look at this, if you look at this uh, general ledger, you have accounts receivable of different customers of the company that you're auditing. Accounts receivable North Supermarket, accounts receivable West Supermarket, accounts receivable Big Supermarket, accounts receivable Small Supermarket. All of these different accounts receivable balances, all of these balances are included in the population. So when you're going to sample, when you're going to take a sample of any of these amounts, you see these amounts posted there, different amounts. For example, under North Supermarket, are you able to see what I am showing on the screen? Right? Uh, Black pages. So Aisha, I'm not sure what is going on at your end. Let me see if can anybody tell me the amount posted on December 7th under North Supermarket? How much is the amount? 1615. Very good. So now you see in any company, the total accounts receivable, right, maybe $1 million, but it is made up of individual items, individual accounts receivable, okay, individual accounts receivables from different customers. So when we say we define the population, we would like to say that we are going to take a sample from only these amounts that are listed under the accounts receivable of different companies. Are you following? We're not going to go into any other account except AR, except accounts receivable. Are you following? Okay. The same is true when you're looking at inventory. The same is true when you're looking at accounts payable. The total amount is made up of individual amounts, and we cannot look at every single one of these individual amounts because there are many. So we must take a sample to see whether this 1615 is accurate, whether this 1625, right, the third item under Big Supermarket, is accurate. So once we take a sample of the items that we have, that we want to test, right, our conclusion is going to be based on what we find in terms of accuracy in the numbers that we have tested. Does that make sense to you? Is this clear to you? When we define population, what do we mean by defining the population? Is looking at only these items. Okay, let's go back to our slides. So this is our first point under the activity B. So we go to the next point and it says define the population characteristics, under which we have the second point, sampling unit. Now this is a very involved point, so try to understand. An individual dollar represents the sampling unit. If the accounts receivable balance is 250,000, then there are 250,000 sampling units. So for example, if the total accounts receivable balance is 250,000, right, when we say monetary unit, that means every single one of those dollars is a unit. But you cannot sample based on dollar units. So what we have to do is the sampling unit has to be the entire customer or transaction. The customer or the transaction is considered a logical unit. Okay. So what does this mean? Let's go back to what we were looking at. Let's go back to what we were looking at a minute ago. You see here, the monetary unit sampling means every single dollar is a unit, but we cannot test a single dollar's accuracy. So what we have to do is when we sample, we have to take particular amounts. So we do a random sampling or we do a systematic sampling, and we pick this amount for North Supermarket, let's say 1615. Then we pick this amount for small supermarket, which is 2245. Like this, let's say we're going to take in our sample 50 amounts, 50 different items. We will pick up from the balance sheet, from the general ledger, 50 of these customers, and we're going to test the accuracy of every single one of these amounts individually, and we'll try to see, are they reasonably accurately stated? Are they fairly stated? Does that make sense? That's called a logical unit. A logical unit is, example of a logical unit is this amount, 1625, belonging to big supermarket. This 2245 amount belonging to the small supermarket. Does that make sense? The logical unit, right? That's the logical unit, right? Okay. The third thing is we have to define the misstatement. So a misstatement is defined as the difference between monetary amounts in the client's records and amounts supported by audit evidence. So let's say you take a sample of a total amount of 50,000. So you take the North Supermarket, and you take the big supermarket, and you take the small supermarket, and you take all of these amounts, and the total amount that you're taking as a sample is 50,000. Then what you would do is you would call individual customers of the client. You would call North Supermarket, or you send North Supermarket a letter asking them, is the amount accurate or not? Okay, so let me show you a sample of those letters. You see this, right? You see this, that this is a letter sent to the accounting department of North Supermarket, and it says, as you see, it says, we are working in the capacity of independent external auditors for Men and Boys Incorporated. Their records indicate that as of December 31st, 2015, there was an accounts receivable from your company. Please notify us whether you agree or disagree with the amount stated below. If you disagree, please provide the correct amount based on your records. So here, this letter was sent to North Supermarket, and if the customer of the client, remember you're auditing the company Men and Boys. North Supermarket is a customer of Men and Boys who has an accounts receivable balance on the financial statements of Men and Boys. So you're going to look at this individual amount of 1750, and you're going to say whether this amount is correct or not. You want to verify this with North Supermarket. So you would send a letter to North Supermarket. North Supermarket will send this letter back, and as you see, they sent it back, and they said that they disagree with the balance. They say the correct amount is 0. That means in your client's record, a balance of 1750 is showing, but the customer disagrees. The customer does not agree. So now you have to investigate who's correct. Is the customer correct, or is your client correct? Your client is who's your client? What is the name of your client in this example? What is the name of your client in this example? Men and Boys Incorporated, right? Men and Boys. Are you having any difficulty? Are you following? You're auditing your company's Adam and Associates. You're auditing Men and Boys. You come to the balance sheet of men and boys and you see the accounts receivable. Now you go to the general ledger to see the details of the accounts receivable. In there you find North Supermarket and you take that as a sample. You then confirm this balance and you find that there is a difference between the client's records and the audited amount. All right? So this is the difference between what they say and what the audited value is. So this would be considered a misstatement, right? If you see that your audited value is not the same as the value shown in the client's records. So you have to determine that how much would be considered a misstatement. If the client says the client says 1750 and the customer says no, it's 1745, right? $5 difference. Would you consider that as a misstatement? You have to define what is a misstatement. Okay, you have to define what is a misstatement and how much misstatement would you consider and still say that the account is fairly stated. So you have to decide that. Are you following? We are still in the planning. So before we do the actual calling of the client, before we do the actual letter, the sending of letter to the client, we have to decide all of these things before we actually go there. Okay, so that if 5 of us are working on this engagement, we would all follow the same rule. We would say that, let's say 5,000 is the threshold. Any mistake that is equal to 5,000 we would consider uh, the account not to be fairly stated, right? If we had a 5,000 or larger. So we would have to decide this. And again, how is this decided and so forth? This is another discussion. For us here, we have to define this. We have to define what is the misstatement so that we all agree, all the auditors agree that this is what we would consider a misstatement. This is what we would consider a misstatement. Clear? So far, so good? Okay. Now, the third point under planning is determining the sample size. Now, we did this in the attribute sampling, if you remember. It is similar here as well with a slight difference. And let's go through this so that you can refresh and you can remember this, right? This is very basic knowledge which you need to be very, very comfortable with. So the first thing is the desired confidence level. Now, let's refresh ourselves. What do we mean by the confidence level? When we say 95%, the confidence level is 95%, right? What do we mean by that? Who can remind us what we mean by when we say 95% confidence level? Our confidence level is 95%. What do we mean by that? The sample represents the population by 95%. Is that what we mean by the confidence level? Is that what we mean by confidence level? Is that right? Is there any difference of opinion? Any ikhtilaf? Reliability? Tolerable error? No. When we say we are 95% confident, we mean exactly, Zainab. We mean 95% sure that the sample is representative. That's what we mean by confidence level. Okay? That's what we mean by confidence level. When we say 95% confidence level, what is the sampling risk? What percentage is the sampling risk? 5%. What does it mean when we say 5% sampling risk? %5 risk of having a non-representative sample, right? How is that different? How is that different from what you said, Kaltam? What did you say? You said that the sample represent the population by 95%. What does that mean? That sentence is not clear. What does that mean? That sample represent the population by 95%. If you meant what Zainab said, then that sentence does not convey to me what you meant. Okay? If you meant the same thing, that sentence does not convey to me what you meant. Okay? If you mean the same, then the way to say is 95% sure that the sample is representative. 95% sure that the sample is representative. That's what you need to say. Okay? All right. That means we have 5% risk of the sample not being representative. So the more confident we want to be about the sample, the larger the sample size would have to be. The larger the sample size would have to be. Okay? And we discussed why in a previous lecture. So if you're needing more detail about this, if you want more detail about this, you can listen to that lecture again. This is true for attribute sampling. This is true for monetary unit sampling as well. The second thing is when we determine the sample size in the monetary unit sampling, the tolerable misstatement. So the tolerable misstatement is defined as what? What do we mean by tolerable misstatement? Right? So the amount of misstatements, very good, that we can tolerate, right? The amount of misstatements. So if there is a $5,000 error in this case, right? In the monetary unit sampling, we have to define that with a dollar amount, not a percentage, right? In the monetary unit sampling, we need to define this as a dollar amount. So say, let's say we say 5,000 or 10,000 or 50,000, whatever that amount is. If we accept 50,000, then that's our tolerable misstatement. Now, the higher mistake you can tolerate, the lower the sample size can be, right? Because you can tolerate a higher mistake, the sample size can be lower. If you can tolerate only a little bit of mistake, then you need to increase the sample size. So this relationship is opposite. And again, I explained this also with an example. If you are not sure why this relationship should be inverse, then you can listen to that lecture again, or that part again. This is in chapter 8. The third is expected misstatement. Now the tolerable misstatement is always in relation to the sample or population. What is the tolerable misstatement related to? Sample or population? Sample, right? Very good. The expected misstatement is usually, not usually, always related to the population, right? Sarah, very good. So population. So what do we mean by expected misstatement? What do we mean by expected misstatement? How many errors we expect, right? How many errors do we feel the client has in the population? So the more mistakes we expect, the larger the sample size should be. The fewer mistakes we expect, the lower the sample size would be. Okay? This is also exactly the same as the attribute sampling. The difference in between attribute and monetary unit is in the population size. What we said about the attribute sampling in terms of population size and sample size relationship, in attribute sampling there is really no relationship unless the population is really small, for example, less than 500. But in the case of monetary unit, there is a direct relationship. The larger the population size is, the larger the sample size should be, and the opposite is also true. The smaller the population size is, the smaller the sample size could be. Okay, so these are you should know the differences between the two, because we have studied so far two, attribute sampling and monetary unit sampling, and this is the first stage of the four stages: planning, performing, evaluating, and documenting. This is the first stage, which is the planning stage. Okay, all right, so I'm going to stop here and ask you if you have any questions on what we discussed so far in chapter 9. No questions? Okay, very good. So we'll stop here inshallah today, and we'll continue our discussion on Thursday on the monetary unit sampling inshallah. If you haven't had a chance to listen to the first day's lecture and you did not attend the lecture, you have that link, and this also will be available shortly inshallah. Okay, all right, I'll see you on Thursday inshallah. Assalamu alaikum wa rahmatullahi wa barakatuh.